Hi guys, in today's video I'm going to be talking about the 10 things I would tell my 18-year-old self all about money. Thanks for visiting my channel, Free Your Finance. My name's Gary and I'm documenting my journey towards financial independence. I talk about investing, property and savings, so if this sounds like something you may be interested in watching, please click the subscribe button below. So today's video is going to be quite different to normal. It's not going to be your usual financial advice like avoiding debt and not leasing a car. This is going to be things I would have recommended to an 18-year-old me. Now you've got to bear in mind that at 18 years old I'd already been working for a few years, I'd already really got into savings too. These are tweaks I would suggest to my 18-year-old self that I think would have put me in an even better position than I am now. Just to give you a little bit of information about me, I'm almost reaching financial independence. I'm around 5 years away from it and I should be financially free at 35 years old. This has been done without earning millions and without inheriting money from family or anything like that. This has been done through hard work, saving and investing. Keep watching this video as I'm going to show you how such small changes could make you a millionaire before you retire. So I think this is a video anyone should watch, regardless if you're 18 or not. These are some tweaks that we can all make to our life to make us just that bit closer to being financially free. Get a credit card. So getting a credit card was something I did slightly after 18 years old. I feel like I was closer to maybe 20. Credit cards have always been seen as such a bad thing. However, what I missed by not getting a credit card sooner was starting to build my credit history at an earlier age, providing you set up to pay it off monthly automatically so you never have to pay any interest on the amount you borrow. They can be a really big problem if not used correctly. However, used correctly, you can build your credit history, and when you do come to hopefully moving out and getting your first ever mortgage, a good credit history is really going to help you. The other big benefit is you can get credit cards nowadays that pay cashback or offer rewards such as travel miles. Read The Simple Path to Wealth. So this one book has changed my life, literally. I don't want to sound like one of these people preaching something, but I read this book about a year ago and it has completely turned my life around. I had never truly believed people when they said things like this on YouTube videos or Facebook videos. It's changed my path towards financial independence. I was always working towards financial independence without quite understanding all the ins and outs that this book taught me, and obviously hence the title of the book is The Simple Path to Wealth. It doesn't involve too much effort. I would have definitely got my 18-year-old self to read this, and I feel like as a 30-year-old now I would be in a much better position. I've got a link to this book in the description below. Hopefully you enjoy it as much as I did and you get just as much as I did out of it. Invest earlier in the stock market. So this leads on from the book The Simple Path to Wealth, as a lot of that is about investing in low cost index funds. I wish I'd found out earlier about investing in the stock market through low cost index funds. I feel like I've missed years of compounding growth. Knowing what I know now, I really regret not doing it sooner. I did invest into buy-to-let properties, which have been a fantastic investment for me, but I wish I'd got some money into index funds much sooner. So to give you an example of this, I'm 30 years old. Whether or not I was male or female, right now I would get my state pension at 68 years old. As I'm sure you already know, this is not a lot of money and you need to start planning about your retirement. It's scary, I know you're 18 years old, it's 50 years away, but what you don't realise is the sooner you start saving for your retirement, the less money ultimately you need to put in. If I'd started when I was 18 rather than 29, I would be so further forward down that path towards financial freedom. So we're going to quickly jump onto my screen and give you this example in some real numbers. So over the last 90 years, the S&P 500 has averaged 9.8% annually. I'm not going to go into too much details about index funds. I've got loads of other videos on my channel all about this, so I suggest once you finish watching this video, go and hit up my channel. However, let's say we started with a balance of zero, we're averaging this 9.8% I just spoke about yearly, and we're going to invest until 68 years old. Right now I'm 30, so that's 38 years. We're going to invest £64 a month. Now, I truly believe that we can all afford £64. I'm embarrassed to admit it, but as an 18-year-old, I spent more than £64 on a night out. So if I started investing £64 a month right now, by the time I had turned 68 years old, I would have over £307,000. That is really, really impressive. No doubt about it, especially when you consider that almost £280,000 of that is earned interest. However, let's say instead of starting this at 30 years old, I started at 18 years old. I now have a a 50-year period until I'm going to receive my state pension. I'm not going to change anything else. I'm going to carry on putting in just £64 a month. And you can see my final investment will be worth over £1 million by the time you hit your state pension age. That is truly incredible. And the more incredible bit, that 961,000 of that is interest. That's money that you haven't put in personally. By our 50th year, we'll still only be putting in £768. However, that 1 year will earn over £92,000 in interest. I wish I'd learnt this when I was 18 years old and not when I was 29 years old. Now, those calculations are based on just £64 a month. Have a think about what you could afford each month. Maybe you can afford more, maybe you can afford less. Regardless, you're going to be so much better off putting something away in investments. Finish watching this video, as I think there's going to be some more tips like this that you're going to find helpful, and then after that, check out my channel and start learning about index funds. Diversify earlier. So as I've already mentioned in this video, I purchased buy-to-let properties when I was younger. I now have 5 buy-to-let properties. It wasn't until I was about 27 years old I realised I had quite a lot of my money tied up in buy-to-let properties, but I didn't really have a whole lot of other savings. It worried me a little bit that there was new rules and regulations coming out about buy-to-lets, and I had so much money tied up in that one investment. I'm sure you've heard of the phrase before, don't put all your eggs in one basket. So right now, a tip to my 18-year-old self would be to diversify my investments. I'm not saying that I would tell him to not invest in buy-to-let at all, but I probably would maybe not buy all 5 buy-to-lets. Maybe I'd just buy 3 buy-to-lets and then put some money in things like index funds, which we just spoke about. Start saving harder, much earlier. So as I already mentioned earlier, even as quite a frugal 18-year-old, I still spent quite a lot of money going out. I truly believe that by not changing my lifestyle too much, I could have saved so much money as an 18-year-old. This money could have then been put into things like index funds or buy-to-let properties, which would then allow me to retire so much earlier. Avoid lifestyle creep. So this is a big one for me, and this is something I would really be drilling into my 18-year-old self. As I've mentioned on this channel before, I started my business when I was 18 years old, and I have to admit I did quite well from it. And as I started earning more, I was spending more too. Yes, I was still investing, I was still buying buy-to-let properties. However, I did certainly have a real bad case of lifestyle creep. Looking back now, I do feel a little bit sick just how much money I've wasted over time. Luckily, I never got caught with the bugs of things like expensive cars or expensive houses even. But one thing I would have really drilled into my younger self is avoid this lifestyle creep. Pay yourself first. So this one sounds quite odd. What do you mean pay yourself first? But basically what I mean by this is have an automatic sum going out of your bank account every month into your investments. This is an amount that goes out just like a bill. By doing this, it becomes just a bill you have to pay for and you just forget about it really. Just the same way your phone bill goes out each month and the same way things like rent goes out if you've already moved out of home. I think paying amounts into these sort of investments automatically is something we should set up as soon as possible. Ask questions. We all have someone older in our lives, whether or not it be parents, grandparents, aunties, uncles, even colleagues at work. Ask them questions. If they're of an age where they've been around for a few years, they know a lot more than we do. Now, as an 18-year-old, I was the worst for this. I thought I knew better than anyone else. But these guys really have been round the block, so to speak. They know what financial mistakes they've made. Ask them, especially if there's someone that cares about you. They're going to be more than happy having this conversation with you. And I think they'll actually be really happy that you're already thinking about your finances. If you're an older person that maybe have got children and you haven't yet had these conversations, I'd really recommend you having them. They will learn so much from you. I wish I'd asked more questions to elders. Luckily, I always asked a lot of questions to my dad, but I had so many more older people in my life that I could have spoken to and got their advice. Don't work so hard. This is a huge one. I would be drilling that into my 18-year-old self. I worked way too hard. It probably, to be honest, caused me to lose friendships. It probably caused me to lose relationships. All I cared about was earning money and working as hard as possible to basically become as rich as I possibly could. For some reason, I had this bug just to earn as much money as possible. And as I started earning more money, I started realising it didn't really make me a whole lot happier. It helps us to a certain extent and we can live comfortably, but once you start earning more and more money, I don't believe by having all this extra money it makes us that much happier. I think happiness for me comes from my friends, it comes from my family, it comes from my relationships, it comes from helping people. All these things can be done and can be had without having a whole lot of money. I wish I'd learnt this earlier as an 18-year-old man. I think this was a really vital lesson that I learned. And then my final thing that I would have told my 18-year-old self was find your balance. Now this ties in quite a lot to my last point, but balance is such an important thing in life. I think I had the balance all wrong between 18 and about 25. It was just about working, earning as much money as I possibly could. Finding your balance in life is really important in so many different things, and money is one of them. I'd definitely tell my 18-year-old self, find a balance. I hope you've enjoyed today's quick video. These are some tips I would give my 18-year-old self. If you're already past 18, why don't you leave what tip you would give yourself in the comments below. I'll be really interested to learn what advice you would have given your younger self. If you'd like to see more videos like this, please click the subscribe button below, and hopefully I'll see you really soon. Take care.